Welcome to Drill Down Earnings. It's a quick look at the latest earnings from Digitalbridge. This is not a company we've looked at before, but I promise here at Epistrophy Capital Research, we look at the 50 most important companies in technology, and I think this $2 billion market cap company is just that. I'm Cory Johnson. So Digitalbridge, I could mention $2 billion company, not huge, really, really interesting, really important, because this company is building billions, tens of billions of dollars worth of data centers. This company used to be a REIT, a real estate investment trust. It used to even look at like shopping centers and stuff. They completely changed their business model to focus on really cell phone towers and digital equipment. They can see the future coming here, and they moved a lot of their business into helping companies build and manage data centers. And so they find investment capital. They deploy that investment capital to help these things get built, to manage these things after they're built, and then eventually sell these things. And they get a piece of the upside. They get a little management fee, 1%, never more than 2%. And then they get some upside, kind of like a hedge fund might. Upside if they actually make a lot of money for their investors. So they find the money, they build the stuff, they manage the stuff, they eventually sell the stuff. It's an interesting business, a little bit different model than we see for companies building data centers. So we look at different numbers in a company like this. One of the numbers we look at is fee revenue. And fee revenue was up 33% for this company. You'd think that'd be good, but the swings in net income, my goodness, they're crazy. It'll be up massively one quarter, sequentially down the next quarter. This quarter down quite a bit from what barely any net income the previous quarter. So what do we look at? The thing to look at is the fee earning equity, the stuff that is earning them fees that is under their management. And their fee equity income, the FEEUM, so they call it FEEUM, was up 9% last quarter. Indeed, it was surging to $35.496 billion under management right now. The stuff that is earning them fees is gaining in size greatly, bigly, as the president might say. And as a result, their asset base is looking really strong. So how did the stock react? Stock went straight up. Stock in after-hours trading, right after the results came up 14% after trading kind of flat all week. And indeed, in the last year, even after the move, that stock's down 34%. But things are changing here. They have a bunch of funds. DigitalBridge Partners 1, DigitalBridge Partners 2, DigitalBridge Partners 3. There's a trend there. Also some co-investment vehicles, that's about a third of the portfolio. The rest of the portfolio, about 20%, 22%, is something called InfraBridge. And the result of those portfolios is some of the assets in there are graduating, aging up so that Digitalbridge can sell them. And Digitalbridge won't guarantee that they're kept in the books at below market value, but historically that has been the case. And the CEO, Marc Ganzi, said everything but telling us flat out that they're going to sell these assets and take a big gain. Here's what he had to say.
Generally, we sell assets on average, Jade. If you look back at the last 8 exits, there were approximately about a 20 to 30% premium to NAV. I'm sort of telegraphing to you that the portfolio is, I don't want to say undermarked, but when we sell stuff, we generally sell at a premium to NAV. That's been the historic performance of our funds the last 2 years. If you look at exits like Wildstone or Vantage, EMEA, or you look at Wildstone, which was our billboard business, all 3 of those exits were at a significant premium to NAV. And so as we begin to return capital on Fund 1, return capital on InfraBridge 1, you're going to see that obviously the portfolio should logically tick up here in Q1 and moving into the balance of 2025.
You rarely hear a big hint about a big gain coming to a company like we just heard in that bite. We'll see if it happens. But what's your big drill on earnings takeaway? What's the one number that tells us a whole lot? Well, Digitalbridge reporting fourth quarter earnings, your essential summary tells you that the fee revenue for this company accelerated quite a bit, up 33%, even though the losses increased. But we know those are not the numbers you look at with a company that's run like a landlord, like a real estate investment trust. This company is really a landlord of data centers, building out massive data centers. The market cap's only $2 billion, but they've got tens of billions of dollars of assets under management. And most importantly, they have raised a lot of money. They announced in this conference call that at the end of the year, they had raised $9 billion to deploy to build new data centers. It's really good news for this company because it means if they continue to have the success they've had in the past, it's going to be good things in the future for Digitalbridge. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.